What's up, everyone, and welcome back to our weekly Forex forecast. Today, we're diving deep into the EUR-Viewer USD pair, which has been on an absolute tear. Get ready, because this upcoming week is packed with market-moving data that you won't want to miss. So, let's recap. The EUR-USD shot up to a fresh monthly high of 1.1762 in the second week of December. It ended the week with some solid gains, just a few pips shy of that peak. Now, what was the fuel for this rocket launch? It was all about the US dollar. The greenback took a hit, and it was a 1-2 punch of weak US economic data, followed by the Federal Reserve's big monetary policy decision. Speaking of the Fed, their latest FOMC statement was fascinating. It really peeled back the curtain and showed us that policymakers are not all on the same page. Think of it like a debate club. On one side, you had Governor Stephen Miran, who was actually pushing for a significant 50 basis point rate cut. On the other side, Kansas City Fed President Jeff Schmid and Chicago Fed President Austin Goolsbee were like, "Hold on, let's keep rates steady for now." This division shows there's a real tug-of-war happening internally about the next steps. The Fed's official statement also gave us a subtle but very important clue. They added the words extent and timing when talking about future policy adjustments. This is their way of signaling that they are probably going to pause the rate cuts for a bit to see how things play out. They're basically telling us, we've made our move, now we're going to watch the data. And they repeated their favorite phrase, they will remain data-dependent. This means every piece of economic news, especially the big ones, will be under a microscope. So, what's next? The spotlight is now firmly on the United States. We have two massive reports coming up: the latest employment figures and the crucial inflation update. These numbers will be the main drivers for the US dollar and, by extension, the EUR-USD pair. If we see signs of a cooling labor market or inflation dropping faster than expected, it could give the Fed more reason to consider cutting rates sooner rather than later, which would likely weaken the dollar and push EUR-USD even higher. However, if ULTA is true, if the jobs report is strong and inflation remains sticky, it will support the argument for the Fed to hold rates steady for longer. This would give the US dollar a boost and could send EUR-USD tumbling back down from its recent highs. So, the stakes are incredibly high. Keep a close eye on the calendar for these releases, as they are guaranteed to bring some serious volatility. That's your weekly lowdown on the EUR-USD. It's going to be an action-packed week, so make sure you're prepared. Thanks for watching, and if you got any value from this breakdown, be sure to hit that like button and subscribe for more Forex insights. See you in the next one.